25 years since the historic release of Nelson Mandela, today, President Jacob Zuma faces an uphill task as he makes his State of the Nation address. Will he be bold enough to restore the country's sliding economy and stop the widening gap of inequality? That is the question we'll try to address on Global Business tonight. Hello and welcome to Global Business. I am Penina Karibe, bringing you the latest developments on the business front. We're live from the Kenyan capital, Nairobi. Wherever you're joining us from, welcome to the show. Also coming up, the Central Bank of Zimbabwe clears bad debts threatening to cripple the banking sector. And after years of neglect, Kenya recommits to revive the leather industry. Zimbabwe's banking sector has been in trouble owing to a liquidity shortage and contracting economy. But the country's central bank has thrown it a lifeline, removing more than $65 million in non-performing loans off their books. The move, part of a raft of measures announced in a monetary policy statement on Wednesday, is aimed at restoring viability to the sector.
At least 6 banks have folded here since 2012, and with the rate of non-performing loans hovering at above 20%, at least 3 more are reportedly on the brink. The precarious circumstances trigger the central bank into action.
The objective really is to clean up the balance sheets of the banking system so that we bring some more stability, more soundness to the financial system. And by so doing, you're actually enabling the banks to play a greater financial intermediation role.
Some analysts argue that the central bank should not buy back debt wholesale, and also urged instituting measures that will not see a repeat of irresponsible lending that has precipitated the current crisis.
Zimbabwe must look at giving money to those sectors that are performing rather than flogging a dead horse.
Another measure announced was the long overdue reimbursement of Zim dollar bank balances that were lost when the economy dollarized in 2009. The issue had been unresolved as authorities haggled over which exchange rate to use to pay back the funds whose value had been eroded by record-breaking inflation of over 2 million%.
It brings to finality the issue of the Zim dollar. It also serves to unnerve investors because there's been this skepticism, especially in terms of the uptake of the bond coins, because some think that it's a way of reintroducing the Zim dollar through the back door. So once you have demonetized the Zim dollar balances, it means there's now that confidence, that assurance among investors.
$20 million has been set aside for the demonetization, which will be completed by June this year. The Reserve Bank also announced a $200 million interbank trading facility and said it had been capitalized to the tune of $100 million so it can resume its lender of last resort role. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
Kenya's state-run National Oil Corporation will raise $2 billion to take stakes in oil blocks on behalf of the government once they near commercial production. Kenya estimates its crude oil reserves to be about 1 billion barrels, and the government can legally take a stake in oil blocks under commercial production through National Oil. The oil firm would raise the money through internal sources, external debt, and other equity partners. It's not clear how much of the oil block National Oil would be buying and whether the amount it plans to raise would be sufficient for the stakes that it requires. National Oil would buy stakes in blocks 10BB and 13T, owned by Tullow Oil and Africa Oil. Oil firms are expected to submit plans to the government for the commercial development of their discoveries on the oil blocks located in northwest Kenya by late 2015. Now, all eyes in South Africa are on President Jacob Zuma as he delivers his much-anticipated State of the Nation speech in Parliament. The president addresses the nation amid crippling power outages, an ailing economy, and a lack of service delivery and social cohesion. South Africans are hoping that the president will stand up and provide leadership to take the continent's second biggest economy back to its rightful place. The day has not been without drama. This speech was disrupted by members of the opposition EFF, led by Julius Julius Malema. EFF was kicked out by security services. The DA walked out. So let's get more now from Angelo Coppola. He's live for us in Johannesburg. So Angelo, it is Zuma's first State of the Nation speech, and so far it's gotten off to a bumpy start. But what is Zuma expected to focus on?
Well, you've covered three of the main issues there. We're looking at land expropriation because there's some talk about land tenure and the fact that foreigners won't be able to own land going forward. He's talking about electricity, we hope, and the fact that the government has got a plan to make sure that in 3 to 5 years there's consistent electricity supply. He's got to talk about job creation. We're expecting him to say something about that and how many jobs they've created in the past year and how many they plan to create in the next 12 months. But it's also about sustainable employment. So it's not just a job for 3 months and then nothing and then another job in 6 months' time. Corruption, we're hoping he's going to say something about that. Service delivery become a major issue. I mean, in Parliament earlier, the joint sitting, we heard one of the EFF members say that there was a lack of service delivery in Parliament because there was no water. So that was a bit of a joke there. We're hoping he's going to be tackling the crime issue. There's a lot of contact crime that's picked up. And probably one of the more important, more relevant ones right at the moment is around the minerals legislation and how the government plans to structure that. So at the moment, you're right, it has been a bumpy ride. And in fact, 45 minutes into when he was supposed to be speaking, not a word has been said from the President except the greetings of the various people in the House and the various dignitaries. Panina?
Yeah, let's talk about that, Angela, because we've seen interruptions by the opposition, the EFF and DA. Security have been called in to drag out Malema and his members. How are the markets likely to respond to these developments tomorrow?
Well, I was watching the RAND during the course of the afternoon as we had various incidents happen around the precinct that houses the Parliament. First of all, there was that EFF press conference that was disrupted by EFF members. One of the EFF members was chased down the road. Then the DA supporters were hit by water cannon for protesting on the road leading into the precinct. And the RAND was weakening during the course of the day anyway. So it's likely that we'll probably see a little bit of flattening out. But the RAND is near 10-year lows at the moment. What the markets are going to do tomorrow is unknown at this stage, but we'll probably get a good sense when you see what's happening with the futures just before market opens at 9 o'clock tomorrow morning.
And Angelo, some critics have argued that the State of the Nation address has become a carnival that avoids the country's real problems. How significant is the State of the Nation address?
Well, Panina, let me put it to you this way. Up until the EFF came in to hold those 24 seats, many voters in the country didn't pay much attention to parliamentary TV. More and more people are watching it, and more people are understanding the workings of Parliament. And in fact, with television now being on all the members in Parliament and the cameras are shining on them, a lot of members aren't getting time to have those naps that they used to have in the past before the EFF stepped in. So I think it's making a little bit of a difference in terms of getting the voters to see what's going on. Today might be considered in some circles to be a bit of a carnival, but it's necessary. It's necessary for a new democracy for the members to express themselves. And I mean, I'm not sure if you heard earlier, there was also about an hour and a half's worth of cell phone jamming that was happening within Parliament, and the media could not report on what they were seeing, and the House actually came to a standstill until that jamming device was turned off. So carnival atmosphere, lots of jeering, lots of people getting removed, the DA walking out as well in support of what was happening because the police were brought in. But I think it is a necessary institution, Panina.
All right, Angela Coppola there for us live in Johannesburg. Many thanks for joining us. Now, Zambia's new president, Edgar Lungu, reappointed Christopher Yaluma as mines minister and Africa's second largest copper producer to help end the row with mining companies over new royalties and tax refunds. The simmering disputes come at a time when copper is near 5.5-year lows and economic growth in the Southern African nation is faltering, threatening investment and possibly resulting in shaft closures and jobs losses. Lungu directed the government to speedily end the dispute, and it's hoped his appointment of Yaluma can solve the problems. One of the disputes involves $600 million in VAT refunds, which the industry says is being withheld by the government. The second centers on a hike in January on royalty rates to 20% from 6% for open pit operations, and those for underground mines to 8% from 6%. Let's turn to the markets now. South African stocks scaled a fresh record on Thursday, partly lifted by strong earnings by Woolworths, which helped boost the prices of other retailers. Now, Woolworths said its half-year earnings jumped 29%, underpinned by sales by David Jones, that's an Australian retailer it acquired last year. The all-share index closed Thursday's trade at a life high of 52,508, up 0.8%. Still ahead, after years of neglect, Kenya recommits to revive the leather industry. And we examine the opportunities for Africans as foreign investors scramble for a slice of the continent's growth story.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
Effects of the austerity measures are evident and were expected. Egyptians, however, seem to be patient about it. But El-Sisi told government he wants to control the prices promptly before people's patience runs out.
You're watching Global Business. Welcome back. Kenya's government has introduced a raft of reforms in its leather industry in a bid to increase production. The sector has for years struggled to take off due to rampant smuggling of raw hides and lack of value addition. Here's Jen Keo with the story.
Another busy day at Kenya's Redemark Leather Company. These workers are rushing to meet increasing demand of leather. The hides are usually sourced from various slaughterhouses, cleaned and prepared for exports. Only 10% is processed locally into finished leather products, a scenario the government plans to change soon.
Currently, we are doing 90% of export, which we are selling to India, Italy, and China. But we expect to bring down the production of, the sales of Wetiburu to product. More currently, we are doing 90%. So in about 2 months' time, we'll bring the export of Wetiburu down to about 60, and we increase the export of finished leather.
Nearly 50% of our raw hides is exported in raw. So it's nothing that we can write home about today. We have significant demand, nearly 8 million square meters of potential leather that is required by our shoemakers in this country. But, you've heard from one of the players, most of it goes.
Kenya's leather industry has been neglected for years. Smuggling of hides, lack of raw materials and an influx of second-hand leather products are some of the challenges ailing the industry. The government has now introduced reforms to make the finished goods more competitive.
The government is working on issues of reducing cost of power. The government is making sure that logistics cost between Mombasa and Nairobi right up to Uganda is reduced significantly through investment in the standard gauge railway. The cost of infrastructure, road movements for moving our goods is, coming down. And this is something that we will continue to drive.
East Africa's biggest economy is facing stiff competition for its leather products from neighboring Ethiopia, which has invested heavily in the sector. But the government now believes, although the sector is in its infancy stage, it sure has the muscle to compete moving forward. Jane Keo, CCTV.
So let's talk a little bit more about that turnaround of the leather industry here in Kenya. We're joined live in studio by Robert Njoka, Director at Zingo Investments Limited, a company that deals with leather production. Mr. Njoka, thanks for joining us this evening. So just bring us up to date on where the leather industry is at the moment compared to 10 years ago.
Oh, quite well. Let me say I appreciate for your people being with us today. And I would like to make a comment that the leather industry today, you can compare it with about 10 years ago. 10 years ago, if you can remember very well, we had a few tanneries, about 4 during the high lake of the leather industry. And currently, we are about 15 tanneries in the country, with more or less between 60 and 70% in production. We are quite actually happy with the government step it's taking today, because in the early days, beside 2012,
Right.
when the government was able to give money to develop the industry, and that was the first contribution from the government to give the leather industry fund to develop or to upgrade the industry. So today I would actually be quite happy to report that the industry is growing. And that's why we are willing to invest in the industry, a few $1 million, because we have got quite high confidence the government step is taking is the right direction.
Let's talk about some of the factors that have hindered the growth of this industry, and one of them is lack of raw materials.
Yes.
Now, suppliers scaled back because they allegedly said they weren't getting value for their money. What's different this time around?
That may not be the position today. For one, about 2 or 3 years ago, a kilo of hide was going to about 70, 80 shillings. But today, a good grade is going to be hold 120 per kilo, which is higher price than any other place in East Africa. If you go to Tanzania, price is about 70 shillings, Kenya shilling. Burundi is quite low. And that's why you see many of these people, they are bringing the material to Kenya.
Right. How much are you investing in this sector in terms of enabling farmers provide quality hides and also equipping abattoirs with skills to treat these hides?
I would like to talk about 2 years ago when we had a pilot project trying to stand the challenges in the industry. And we had to start from the farmer, whereby we wanted to educate the farmers the value of taking care of the animals. One, by animal husbandry, make sure that the animal is taken care of before actually slaughtering, to make sure that there are no some defect on the byproduct, they call byproduct, that is the hide. And what we are seeing after the veterinary office decided to take back now the dips and what, we are also coming in to tell the farmers, look, if your animal is taken care of, instead of buying your hide at 1,200, you can get 2,000. Two, after that, we are training the people in the slaughterhouses to make sure that instead of using the free knives, we are now encouraging them to use dehiders. 2012, I believe we brought in the country about almost 350 free knives. That's what to make sure that the man-made defect, they are well controlled. Yes.
What specific time frame are you working on or working with to turn around the industry, bring it to a level that it can competitively, or rather compete effectively with countries such as Ethiopia?
Good enough. The only difference the Kenya industry course will be taking and what is in Ethiopia, Ethiopia government took a lot of time to develop the leather industry. That means it was government setting up the facilities for the industry, and then after the industry was really stable, they released it to the public for learning. That is different from Kenya, where the stakeholders, they are using all their resources to develop the industry. And let me say I'm happy now, because the government, like last budget, they give us about 1 billion. So that means the government is coming on board to assist the industry. So I'm very sure if the government move in that trend, they are moving today. In 5 years' time, we'll be in a position to say, yes, we can use our product.
All right.
Yes.
Let's leave it there for now, Mr. Njoka. Thanks very much for talking to us tonight. Robert Njoka, Director at Zingo Investments Limited, a company that deals with leather production. Now, key African markets are becoming more crowded and competitive. As a result, an increasing number of foreign companies are expanding rapidly in Africa, and entrepreneurs are taking advantage of new global opportunities. But there are challenges as new entrants find their way in complex and swiftly changing local context. CCTV's Famida Miller moderated a panel discussion in Addis Ababa at the Emerging Africa Summit, looking at new actors in the multinational corporation sector across the continent.
Dr. Kuri Ada I'd like to begin with you, looking at Microsoft's operations in Africa. As a global corporation, what are we looking at in terms of the next frontier, in terms of ICT development as well as technological advancement?
We are in 49 countries in Africa, present. However, our model is completely different. Our target is not to be physically present everywhere, but through a circle of partners, an ecosystem of partners, that right now I'm proudly can say 10,000 African partners are really developing the right technology, the right services within, let's say, a platform of Microsoft. But let me take this opportunity in order really to highlight some of the points why we are here. There is an interest in Africa because of the size of the market opportunity that we are having here. There is a kind of an interest because of the economy is going well with 6 out of 10 fastest growing countries in Africa. Again, I didn't hear anyone talking about the biggest opportunity within the continent, which is the people themselves, the population, the demography. The demography itself is giving us, as a private sector, we are seeing a huge opportunity here because it's a young population. 60% are below 29 years old. They are hungry for opportunities. They are hungry for innovation. They definitely would like to accelerate the growth in a different way, which is giving us an opportunity because technology is really an enabler here, rather than just an industry.
The IMF chief, Christine Lagarde, had warned that because of a slowdown in the Chinese economy, Africa may need to be careful and possibly look out in terms of Africa being hurt by that slowdown because of it being part of this global economy. Is that a statement you agree with, or do you see that China's investment would continue at the rate it's been at?
Yeah, I think so. Not only China, the whole world economy is now good at this time. But I think Chinese FDI will continue to invest in Africa. It's not only Chinese government policy, but also the Africa countries.
The arrival of China, the Chinese both are willing and able to help transform Africa's infrastructure by itself, I think has made Africa go from the hopeless continent to the Africa rising narrative. I don't think we should discount that. China has been transformational by and large in Africa. Yes, there have been some challenges when Chinese are investing in Africa, but on balance, we all have to admit China. The second thing is, over the last 10 years, the commodity price super cycle was driven primarily by China. China's growth. China grown by double-digit GDP growth helped contribute to the 5.5% overall GDP growth of Africa because commodities from Africa were in big demand in China, and the Chinese were willing to pay the good price. So, I mean, not just in Africa, but I was just recently in Brazil, and Brazil also benefited as a major commodity exporter in the last decade from the growth of China. So I think China's contribution to Africa's growth needs to be highlighted and really acknowledged, because I don't think much of what infrastructure you see in Africa today could have existed.
Let's look at commodity prices now. When gold rose on Thursday, lifting from a 5-week low hit in earlier trade, helped by a lower dollar, Sweden's surprise decision to launch monetary stimulus, and heightened uncertainty over Greece's debt. Now, gold sell-off for much of this week, despite the Greek debt crisis, could be an indication that markets are expecting an ultimately positive resolution. Now, there's just one cinema in the whole of Central Africa, and it can be found in the Chadian capital, N'Djamena. Keeping it in mint condition, though, hasn't been easy. In today's Grassroots, we meet the man on a mission to put the sparkle back in the silver screen. Clementine Logan reports.
Tucked away in the heart of Chad's capital, N'Djamena, is a hidden gem. Le Normandie has several accolades to its name. It's the only digital cinema in Francophone Africa and one of the first on the continent to show the latest releases in 3D. Its story is entwined with the city's history, first built in 1949 but shut down after the Civil War broke out 30 years later. Finally, in 2011, Issa Serge took on the job of bringing it back from the brink, with the help of a cash injection from the government of over $1.5 million.
There was nothing. It had become a ghetto. Homeless people used it as a place to sleep. This had carried on for about 20 years. We complained that there was no cinema here, and we started looking for private funding, but banks weren't interested. Then finally, the president heard us, and he said, okay, let's renovate it.
It's now the only cinema in Central Africa, and its importance isn't lost on Chad's film enthusiasts.
Since the 1970s, many cinemas in Africa disappeared. There are hardly any because cinema isn't always a lucrative industry, so they became mosques, churches and shops.
All our hopes lie on this cinema. Thanks to it, we have a place to voice our dreams, we can work on our craft and help the public discover what we do.
In the evening, we've here families, we've here children, we've here wife or friends will come here to see a movie, and that we are very proud of this place.
But keeping Le Normandie's projector whirring and its seats full hasn't been easy.
It's difficult because normally a state-owned cinema should have help from the state to help maintain it and organize festivals. Unfortunately, the Ministry of Culture hasn't helped us for 3 years now, so I have to find private partners to sponsor us or advertise, but the private sector is not very open here, so it's very difficult.
But Issa says he's in it for the love of cinema and not to make a profit. Times have changed here in Chad though. Le Normandie now has stiff competition from cable television and pirate copies of films.
Youths today watch movies on their computers. They don't know about cinema and the big screen. They watch on small computers, make pirate copies and are happy with that. But as soon as they come here, they love it and come back.
But the cinema has still captured the imagination of some young people in N'Djamena, and now Le Normandie boasts Chad's first female projectionist.
Cinema is my passion. I love cinema, and since I started here, I've learned so much. I'd love to become a filmmaker.
Issa is now looking to telecoms companies and other businesses for publicity and says he's determined to keep finding other avenues for funding. But if this piece of national heritage is to be preserved at its best, a change in hearts and minds with more value given to cinema in Africa will be needed. Clementine Logan, CCTV, N'Djamena, Chad.
And a quick look at the currencies. Nigerians are dumping the naira currency as it skates lower by the day, driven by fear of the unknown. After authorities pushed back the date of a presidential election, that uncertainty has already sent foreign portfolio investors scurrying for the exit. The naira this week fell through the key level of 200 to the dollar. It ended the day Thursday at 205.90 to the dollar. And that's it on Global Business tonight. To send your feedback to Global Business Africa at cctv.com. You can visit our Facebook page, CCTV Africa, and you can also stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I am Penina Karibe. Thank you for your company.